Take a look in your wallet or, open up your banking app. We interact with it every single day. We work for it, we spend it, and we try to save it. But how often do you actually stop to think about the invisible architecture behind it all? Well, in this explainer, we're pulling back the curtain and taking a really deep dive into the hidden system of money. So let's start with a deceptively simple question. What actually is money, really? I mean, most of us just think of it as physical paper we hold in our hands, or maybe a static number on a digital screen. But honestly, that's barely scratching the surface. To truly understand the system, we need to look much deeper. At its absolute core, money is simply a tool. It's a man-made system deliberately designed to make exchange easier. Think about the basic mechanics of trade for a second. Instead of dealing with the incredible friction of trading physical goods directly, where you're just hoping someone has exactly what you need, the process becomes beautifully simple. You give money and you receive value in return. It acts as a flawless, universal medium of exchange. That brings us to part 1, the evolution of exchange. From barter to bytes. Before money was a thing, human beings relied entirely on the barter system. But barter was incredibly clumsy, and it had some crippling problems. It was so hard to match needs. Imagine you had grain, but what you really needed were tools. You had to go find someone with the exact opposite problem. Plus, there was absolutely no standard measure of value. Money elegantly solved this whole headache. It introduced a common value, a universal system that everyone could finally agree on. Let's rapidly trace that timeline of human progress. Millennia ago, we started with that limited barter system. Then, centuries ago, trade evolved and we upgraded to precious metals like gold and silver. Decades ago, the world shifted heavily into paper currency. But look at the present day. Today, most money isn't physical at all. In fact, physical cash is essentially an illusion. The vast majority of the world's wealth exists entirely digitally, just as bytes in a computer system. Moving on to part 2, the hidden money engine and where money actually comes from. Now, this is where the story gets really fascinating and, frankly, where most of us have a massive blind spot. There are actually 2 distinct engines of money creation. On one side, we have central banks. They print physical currency and control the overall money supply. But then we have commercial banks, the everyday institutions that you and I use. And here is the absolutely crucial point. Commercial banks create money through loans. Let that reality sink in for just a second. Step 1, a commercial bank approves a loan. Step 2, new money is created in the system. When a bank issues a loan, they aren't just going into a backroom vault and handing you someone else's stored savings. No, that new money is literally created out of thin air, the very moment you sign the paperwork. Most of us operate under the assumption that the amount of money in the world is strictly limited, but it isn't. The money supply can and does increase constantly. This happens primarily through 3 key levers: loans, credit, and monetary policy. Now, this constant expansion is exactly why economies are able to grow, but it's also exactly why major financial crises happen. Let's look at part 3, why money loses value, the mechanics of inflation. We really need to walk through this cause and effect chain carefully, because this dictates exactly why everyday goods take a bigger and bigger bite out of your paycheck over time. First, as we just saw, more money is continually being created in the system. Because there is suddenly more of it circulating, each individual unit of that money naturally becomes less valuable. And as a direct result of that, prices go up to match that new, lower value. If the money supply increases, but the actual amount of goods in the economy doesn't, prices simply rise. That right there is the hidden tax of inflation. Finally, we reach part 4, the power of the system, going beyond currency. Banks aren't just giant piggy banks where we store our cash. They are active, highly powerful players shaping our entire world. They're the true creators and distributors of wealth. They issue the loans, they charge the interest, and they completely control credit. This isn't some passive storage facility we're talking about. It's an active mechanism that literally dictates how economies grow and how businesses survive. And why does this matter so much to us? Because beneath those digital numbers glowing on your screen, money represents something deeply profound. It's a direct representation of your time. It represents your effort, your ultimate value. It is literally the life force of human labor, all translated into one universal system. And that brings us to a foundational truth about our modern world. Whoever controls money controls influence. Let that resonate with you. The entities controlling the money supply, controlling the loans, and controlling the credit are ultimately the ones controlling the influence over economies, over governments, and yes, over our lives. Every single one of us is a participant in this architecture. You earn, you spend, and you save within this framework every single day. But it's absolutely critical to realize that the massive system all around you is so much bigger than your individual transactions. It's an invisible structure that dictates the very rules of the game you're playing. Money is so much more than what you use to buy your morning cup of coffee. It's an incredibly complex system of creation, distribution, and influence. And once you truly understand it, how it's created, how it loses value, and what it actually represents, your entire perspective shifts. So I'll leave you with this final question to think about. Will you continue to use money blindly?
This is CorpFile, inside the world of big brands. Subscribe to explore the real stories behind the companies that shape our world.